and welcome to TQ Talks, where we talk taxes and tax-free living 365. Here are your hosts, Craig White, Sebastian Singh, and Patrick Augustin.
Oh, man. And we're back.
We are back. We are here, back and better than ever.
Man.
Let's go. Let's jump right into it, man. About what? Go for it. We're here. Tell the people what you think about it.
I just want to give a shout out to Logan and
Logan and Noah.
Yeah. For being awesome. That's it. If you know, the family knows who they are. I'm not going to go into all that, but man, great people.
Yeah, they're pretty cool, man. Good parents. Good uncle. Great uncle.
I don't know about that part.
All right, here we go. So Logan and Noah hopefully will be business owners one day.
Yes.
And we got to know which way they'd be structured and why.
What you are, because that's one of those things where people say they're interested in setting up a business. That was one of the questions we got. What's best, what's worse, what's blah, blah. And we get it. A lot of information floating around there. I've listened to a lot of people explain certain things. And honestly, I would say the vast majority of them, to me, are correct. So what we're going to do is try to go over the different types of businesses we have. I think we even did an old podcast.
We did. So in case you guys haven't caught up or caught on to what we've done or what this topic is which business is best for you or which type of business.
And who you are in general, because I think sometimes people set things up and don't have an idea of what it is. So the options are going to be sole proprietor,
LLC, C Corp.
LLC, yeah, C Corp,
I guess.
Partnership.
Yeah, we can add LLC
partnership, and then a C Corp, and then pretty much an LLC still being treated as an S Corp, because S Corp is not a separate.
What does all that mean? S Corp, C Corp, LLC, partnership.
So really, I guess what happens is to start off with the first is sole proprietorship. So a lot of people think that since the race to zero is what everybody's trying to do on their taxes right now, which is still, you really got to do more tax planning than just trying to alleviate all your debt. Because just to give you a nugget, alleviating all your debt also puts you in a position where you're not doing anything. So you're racing to zero on your taxes because you don't want to pay anything, but you're also racing to zero in life.
Right.
Because you're not going to qualify for a house, a car, nothing, because you have no income to show. But we're going to go on. That's a different discussion.
Back to the planning, depending on what.
So sole proprietorship. The point was that people were saying, well, I want to open a business so I can offset debt, which you guys talk about all the time, which is true. But what is it? And what I'm saying is sole proprietorship to start off with is, listen, it's just you working. It's you trying to make sure we're clear on the definition of businesses, actively seeking to earn income and make it a viable business. It can't be a hobby because IRS don't do hobbies. So you're actively doing it. The difference would be you never registered with the state and with the feds. So you're just bringing in money, reporting money, bringing expenses, reporting expenses.
And that's a big part, though, is also the reporting.
Yeah.
Right? So you're not a business in the IRS's mind if you're not reporting how much you're bringing in.
Yeah.
Regardless of your expenses or your income. It's both sides.
And it's always registration is going to be the definition of that.
Right.
And also actively, again, pursuing the goal of making money. The point is, under a sole proprietorship, you can still get all the same business deductions as an LLC, right? That same person that registered, Bassy went and registered, got everything done. It looks wonderful, business bank account, all the rest of that stuff. And I didn't do any of that, and I could still go, and I'm still going to go on my Schedule C and write off the same stuff you did. Like nothing changes. The biggest difference on the LLC side is the protection.
Right.
So
is the protection and the ability to use it elsewhere to get your
very true,
right?
Yeah,
your EIN, to get your tax-free benefits if you are utilizing some kind of business that gives you that.
Right. Business credit, etc. Like
It's
that.
everything
Funding,
else that goes
etc.
with it.
Agreed.
Yeah.
That's what it would be. So the difference, again, just skipping sole proprietorship, I didn't register with the state and with the feds. Single member LLC, I did register with the state and the feds. Then we go into partnership. Now, the partnership thing is like a surprise. It's like peekaboo for a lot of people when they do their taxes. They come and they drop the paperwork. We always ask for your EIN letter if you're a new client. And they go, why? I know it is. It's me. It's blah, 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 2000. I got it.
Who else is on this?
Right. And then when we see the middle of the page, it says, you need to file Form 1065. Right. And it's like, wake up. The IRS is seeing you guys as a partnership. That means it is you and somebody else or multiple people Still operating as an LLC, but it's 2 or more members.
Which means the filing is more complicated, which also means
you get charged more.
That's it.
Right. So you have a
So we definitely start with that.
Yeah. And
make sure people understand the structure of their business and what that means exactly when it comes to filing.
It does. And so the biggest thing for me, one of the biggest things I say is the issue of I want to create legacy or I want to include, and that's cool. Then you add your mom and Nene and Shay Shay and all these other people and the kids and all that. But now all of them are supposed to get K1s. K1 is literally what shows the income or loss from the business. So every person that you listed as a member of that business now becomes liable to get that K1 of the partnership. And so you have to file that business return separately, then turn around and issue all the K1s to everyone that's listed there. Then they have to add that to their personal. So even though you're trying to do something good for someone, the point is you also have to understand the ramifications of what's coming on with it. Like, listen, I think I had one person, I said 8, 9 people, didn't know. Fair enough, didn't know. When I explained, they're like, oh, dear Jesus, right?
Now, not only, like you said, the business has to file. Everyone has to file their own separate K1s, but every different person on there has to pay.
Right, because these people already filed their taxes.
Correct.
So now you have to amend the tax return for all those people. So it's important to understand. That's the real, understand. You're still LLC, still protected against, the point again, the protection we're talking about is if a lawsuit occurs, theoretically, the LLC gives you the ability to separate your business money from your personal. Because theoretically, you're supposed to have, you're not supposed to be commingling funds. We use those terms, but pretty much business bank account, personal bank account, and those things stay separately. And again, if I've hurt myself in whatever I'm doing in your business, I wouldn't be suing your person. I'd be suing your business and the story. That's
and your personal assets, right?
Yeah,
you
personal
want to protect
separate.
everything that deals with your personal from your business.
So again, sole proprietorship. You don't have anything set up, but you still run the business. No big deal. You get all the tax benefits. Single member LLC. You do have everything set up with the state and Fed. You get all protection as well, which is huge.
Partnership LLC.
Right? 2 or more. Then we go into like a C Corp. C Corporation, we're not going to really touch on because hardly anyone qualifies to do it. Usually C Corporation you want to get into when you're making a lot of money and it's a conglomerate. You're really doing a lot of there's a lot of moving parts going on. So let's just pause and say 9 out of 10, if we're talking to you about a C Corporation, you more than likely have a heck of a lot going on, and we'd be telling you, here's 2 firms that we like.
Right. And this is who we're going to put in.
Nabisco, right? You know what I mean? I'm just making up. Go there because you're big.
Yep.
S Corporation is really just a treatment, right? That's what is a treatment. We file, I can't think of the form name. The 2553 to ask them to treat you
your LLC.
Only, right, and only the tax purposes. You're getting treated as an S Corporation. We're not going to go into, maybe we are going to go into it, about the...
about why.
Why, yeah.
Yeah, so normally when you're bringing in, I don't want to say a money's relative, right?
Net.
But 40 to 50 or more.
Yeah, usually
net
that's about we always say.
Is where we start looking into it and saying, hey, you know what? You can save a ton of more money if you get treated as a C Corp or file as an S Corp. As an S Corp.
Yeah.
So you can be taxed as a C Corp, but as still being an LLC.
Right.
Or getting the tax benefits.
Right. So that's the whole point. It's like, again, if you're trying to figure out, should I remain an LLC or should I convert? As Sebastian already stated, everybody's different, I'll be honest. But the number seems to always ride in that, like you said, 40 to 50. I used to be 30, but they're expecting a salary to be given under the S Corporation, right? So you have to be able to make enough money to put yourself on a reasonable salary. And what happens is you get double taxation gets tossed out a lot, but that's the truth. When you're an LLC, you have self-employment tax, and you have all the other stuff that goes on, the federal, the future, and all the other. When you do an S Corporation, the thing about it is you're usually putting yourself on quote-unquote a reasonable salary, and then the stuff after that, the money that's the difference of, doesn't follow or doesn't drop into the, hey, I have to pay additional self-employment tax. So you save yourself money. Not to mention, you have a lot of deductions. There's a lot of rules that go into it. We won't get into it, but there's a lot of things that go on an S Corp side that is very advantageous to the person. So yes, you're still listen, until you become or start getting treated as an S corp, you're still just a regular, as they say it for the IRS, just a regular person.
Right.
When you do that request, then you're treated as like a real company, right? Because limited liability company and then there's corporation, C corp, S corp. They're saying, okay, we want to treat you or give you the same permissions that we give a corporation, so they look at you different.
Exactly.
Right? And that's the biggest thing. So again, your income really dictates the transition from LLC to corporation.
And how you're going to be filed.
To S corporation, at least for us. I know C and S. You keep saying C and S, which I don't say. I don't know why, but C and S, depending on how you want to shift it. And truthfully, a lot of times when you set up a company, like when you go and file your EIN, sorry,
right?
And you're doing whatever, when you choose a corporation, like they're automatically listing you as a C corp on your paperwork. I don't know if everybody's noticed that. They list you as a C corp, and then you have to make the election to
go back down.
Right, to say, hey, I want to do the S corp part, because if you just say, okay, I'm leaving because I put it in as a corporation, they're going to automatically assume that's what you're trying to do.
Yep.
So again, it's a lot of stuff. We obviously help with that. We set up businesses, teach you the right and wrong as we talk through your business platform and what you're trying to do. But there is, I don't want to say there's no right and wrong, because that's probably not what I should be saying, but everyone's situation is different.
And I was just waiting.
Yeah.
I was going to say, as we always say, we always say, every single situation is different. Mm-hmm. You and your mom, you and 4 brothers, you by yourself, you making $100,000 versus $10,000, you working out of your house versus, owning a warehouse. Every single situation is different.
Yeah.
So please reach out to us. Make sure you know what you're doing, how you're filing, and let's look at the way you're filed right now. If you already have a business, if that's the best way for you, we're going to keep you there.
Right.
If not, we're going to suggest differently.
Pay attention to it. And again, the rules are different. Just to touch on that, 1065s or partnerships, if you have no business transactions through no income or expenses, the IRS does not expect you to file.
Right.
It's no big deal. You skip a year.
Yep.
If you're asked to be treated as an S corp, then you have to file another separate tax return. We didn't touch on. I'm sorry, you talked about 10, but I didn't think about it. The 1120S has to be filed earlier than your personal. Right, March 15th instead of April 15th, and whether you have money passing through or not, you still got to file.
You still got to file,
right? That's a total different rule.
Even if you tell them, "Listen, I have nothing."
Yeah, and then you're gonna get banged $200-something for penalties for late filing, even though nothing was going in there. So there's things again to talk about.
But that's stuff we should know, to be honest. That's stuff we should know. Call us. You do your business.
Yeah, I hope so.
Let us do our business for you, and everybody will be all right.
Yeah, we hope this was helpful. We hope it was clear. We're trying to make sure you guys understand what it is. Again, like he said, consult your professionals. If it's not someone that you trust, make sure the information that you see or that you hear or that you read, you go ahead and double check it, triple check it with other people as well, and hopefully it makes sense for you, man. So,
questions, comments, please let us know. Give us a call, email, DM, whatever it takes.
Thanks for joining us again. We're back. We'll talk to you soon, guys.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at TQFinancials.com.